Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and a very, very happy Friday. In today's program, I want to discuss a little bit about Twitter. I spoke about Snap this morning, but now Twitter I want to talk about, and a couple other recent developments which has occurred within the last 30 minutes or so. But before I get into that, don't forget these little programs or these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So Twitter. Yes, remember this morning I was talking about Snap Incorporated or Snapchat. To the youngsters, I don't really know what Snapchat is. But anyway, I was talking about Snapchat sort of disappointing the market with its earnings. And of course, to follow suit, Twitter did exactly the same. It's announced its earnings at 1.18 billion versus 1.33 billion expected. This is what they had to say. Reflecting advertising industry headwinds associated with macro environment, as well as uncertainty related to the pending acquisition of Twitter by affiliate Elon Musk. So basically, in a nutshell, they're blaming fall in advertising and Elon Musk. We all know there was a lot of drama in relation to Twitter and Musk. And don't forget, I think it's the 21st, not the 21st. Anyway, there's an impending court case coming up soon where Twitter's taking Mr. Musk to court for pulling out of the Twitter acquisition. So we've got all that drama. But realistically, though Elon Musk has not helped, obviously, really, it is really to do with waning advertising market. That is the real reason why Twitter is actually, unperforming earnings. In fact, on the announcement, its Twitter stock was down by 2% in pre-market trading. It's recovered slightly since then. We'll have a look at it in a minute. But it is the real blame is on the advertising. Because obviously in the difficult environment we live in at the moment, many companies are cutting back on costs. And one of the things they're cutting back on, of course, is advertising. So that's the main deal. But let's have a quick look at Twitter, because like I say, it's recovered slightly from its pre-market. It's currently trading at $39.26. 26 cents. So, it's not as shocking fall as Snapchat, because that dropped around about 25%. So it's not as shocking as Snap, but still it is a little bit scary, those earnings, because it leads me to my other point. Why I think this announcement is indeed something to be aware of, because what does if it's down to weakening advertising or less advertising and less companies are spending on advertising, what does this mean to the big boys? What do I mean by the big boys? Twitter is quite small, okay? Well, it's not small, but it's small compared to these big boys. And I'm talking about Meta and I'm talking about Google. Those are two massive companies who rely heavily on online advertising payments. Now, this could be a foreboding for doom for these two firms in their earnings. So this is something which next week is happening. So we're going to have to keep a very close eye on this. I mean, Meta or Alphabet starts it first. That's Google. Their earnings are expected on the 26th of July. And then Meta, which is Facebook, okay, their earnings is due on the 27th of July. So are they going to show similar results to Snap and to Twitter? And so, like I said, don't forget this morning, like I was talking about Snap, the combined value of all the similar companies like Google, Facebook, who rely on online advertising, they lost around about 47 billion in market value yesterday on the back of Snap. So what is it going to happen if Facebook and Google have the similar sort of problems to Twitter and Snap? So yeah, big days, 26th of July, Google, 27th of July for Facebook. So be prepared. Now, I want to talk about something else which has just happened in the last half hour, which has moved the market. And we're going to have a look at it quite dramatically. And that was US Services PMI was announced. And it came in shockingly at 47 versus 52.7 expected. Now, don't forget, US services PMI, the number is 50 is normal, above 50 is good, anything below 50 is shocking, is not nice, is not good, it's not a good sign. So this is the first proper sign that indeed we are heading towards a potential recession. Okay, don't forget this morning we had German PMI, services PMI, that came in at manufacturing PMI, sorry, that came in at 49.2. The only good one was the UK today, 53.3. But the US at 47, that is really shocking. And let's have a quick look at exactly what's happened to the market on this announcement. First of all, let's have a look at the euro, okay, because the euro has been under an awful lot of pressure following yesterday's, obviously, for one, the interest rate increase, which boosted the market for a bit, but that's shocking and disappointing, lackluster of a press conference. But since the services PMI, we're seeing a weaker dollar. And indeed, the euro is currently trading now 1.02443. And the cable is really interesting as well. The cable is skyrocketed. Like I said, the only good services PMI was from the UK today at 53.3. It's now above that key area of interest, which was I've been watching for a while, which has capped it for quite some time, which is 1.20034. So again, weak dollar across the board. If we have a look at the dollar yen, okay, dollar yen, again, weak dollar again on the back of this services PMI. And guess what is really benefited? Guess what has really benefited from this bad data? And it's from something else as well. Have a guess. Yes, you're right. Gold, one of my favorites. Gold is now trading at $1,738. This morning I was saying I'm keeping an eye on this because it looks like it's beginning to get its shine back. And indeed, because of obviously the bad services PMI, it's now trading currently above that level I've been watching for ages, 1,727, and above the other key level of 1,733. So is it back? Is it back for its safe haven status? And like I've said before, don't forget, as I said the other day, gold has been weak because of obviously high interest rates. Excuse me, I'm afraid to be dry. High interest rates and very high bond yields. Well, what's also helping gold at the moment is the US 10-year Treasury yield is down more than 2%, giving the momentum to gold bulls. So this is really helping the yellow metal. So is it back? I was thinking it might have been, I said it started to look interesting this morning, but now it certainly is trading above that $1,727 level. Can it stay above it? Is it really back as a safe haven? So we'll have to see. Now, that's what's happened in the market so far today. But what a week we have had. What a week we have had. Let's do a bit of a recap of what we've had this week, because like I say, I'm exhausted, but I'm so excited by what we've had. So let's start off. At the beginning of the week, we had Apple make an announcement that it's reducing its costs and its hiring, which scared the market because, as I said, the reason it was doing that was because of obviously current economic conditions. Netflix loses 1 million subscribers, but it was better than losing 2 million, which the market expected. UK CPI comes in 9.4%. Gas fear then, we had gas fear. All the countdown to the Nord Stream pipeline, will it be turned back on? EU Commission urging the other EU member states to reduce consumption of gas to 15%. Remember that as well. So we had that big gas issue. Eventually, Nord Stream did come on board. Then we had the ECB raising interest rates by 50 basis points, which really surprised the market. And then we had that abysmal press conference by Christina Lagarde. And today we had Snap and we had Twitter. And then we've just had US services PMI, which has again scared the market. So what a week we have had. But guess what? We've got another exciting week to come. We've got US durable goods, US consumer confidence, US new home sales, Fed interest rate decision, Fed monetary statement, German CPI, US GDP, German GDP, EU GDP. Wow, what a week. What a week. Plus Alphabet's earnings and obviously Meta's earnings and Apple's earnings next week. So we've got a hell of a week ahead of us, a real big week ahead of us. And I really hope you can come along and join me for those events. I will be doing a watch along. I'm not sure which one I'm going to do it on yet. I'll have to decide, but I'll let you know on Monday. So we've got another massive week ahead of us. So yes, don't forget, you can ask me questions anytime you wish. Just close it out. The European trading session, the European markets, FTSE is currently up 0.22, DAX currently trading at 0.85, Eurostoxx 50 currently trading at 0.52. So yeah, like I said, you can ask me questions anytime you like. Or if you think of a question later, go into the comments on either Facebook or YouTube and leave it in the comments section. I will see it and I will answer it next time I'm online. So next time I go live for another video. So please feel free for that option as well. Okay, if there is no questions, on that note, don't forget, I'll be back online again on Monday, both at 8 a.m. UTC and 1:30 p.m. UTC. So I hope to see you then. And like I always say, if you're watching me on Facebook and you like it, give us a follow if you like. If you're watching me on YouTube and you like it, subscribe if you like. Hit the notification button so you know next time I'm going live. Anyway, till next time. Oh, and another thing, if you liked it and you found this video interesting and helpful, give me one of those. It's nice to know that you're liking what I've done. I've got a like already, which is nice. But remember, anyway, till next time, remember, these videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.